Deepak, you can start, I think. Or Abhay is to start, na?
Deepak.
Abhay, you're...
Sir, can we start, sir?
Yeah, go on, please. I'm there.
Yeah, okay. Very good evening to all. President of BCS, Mr. Abhay Mehta. Respected guest speaker, Shri J.B. Mohapatra ji, Chairman CBDT. Vice Chairman of Taxation Committee, Anil Sathe, and fellow professional brothers and sisters. I, on behalf of BCS, welcome Shri Mohapatra ji, and I'm very grateful to him for accepting our invitation to address our members at large and to share his thoughts on direction of tax policy in India. Friends, let me share with you that when BCS approached him for presenting the post-budget representation, he not only gave the time to hear us out, but during the meeting, he heard us patiently and discussed the purpose of the proposed amendments with statistics and rationale behind them. He was so humble to express and admire suggestions that were given by BCS. Friends, after hearing us for almost an hour, he immediately called his colleagues to discuss the issues listed in the post-budget representation. Not only this, when we requested him to address our members and share his thoughts, he readily agreed, and we all are thankful to serve for the same. Let me inform you that during the entire discussion, he was very positive and expressed his desire to create a taxpayer-friendly atmosphere to bring about stability in and simplification of tax laws, which would help in ease of doing business. He explained that the endeavor of the government was to frame policies that would reduce litigation significantly and ensure that if disputes did arise, they would be resolved expeditiously. I'm sure he will address all these issues today in his talk and explain the other intentions of the government. Friend, Shri Mohapatra ji, a postgraduate in English literature from Ravinshaw University, Cuttack, has reached this highest position because of his personal qualities like humility, polite nature, positive attitude, and a knowledge and experience that he gained while serving several prestigious positions in various central ministries as well as in income tax department. He held various positions since starting his career as an IRS officer in September 95, the same being that as Assistant Commissioner and Deputy Commissioner of Income Tax from 1987 to 1996, Joint and Additional Commissioner of Income Tax at Kolkata and Mumbai from 1996 to 2002, Additional Director of Vigilance, exercising preventive and reactive vigilance jurisdiction over Government of India Group A and B officers from 2002 to 2006, Commissioner of Income Tax Appeals Delhi from 2006 to 2010, Commissioner of Income Tax Nagpur, Maharashtra from 2012 to 13, Joint Secretary and Financial Advisor in Indian Ministry of New and Renewable Energy, Ministry of Earth Sciences, Ministry of Electronics and Information Technology, Department of Science and Technology, and Department of Biotechnology from 2000 to 2018. Advisor to Principal Scientific Advisor to Government of India under the Cabinet Secretariat from May 2018 to February 20. Principal Chief Commissioner of Income Tax Hyderabad from February 20 to May 21. And Chairman CBDT from June 21 till date. Friends, having a vast experience, he is today with us to give a talk on direction of tax policy in India. Friends, Mohapatra is a family name in India, which was given to persons from the later Vedic age and was normally gifted as an honor for serving the country with constant and highly leadership-oriented efforts. This name is an apt description of present Chairman Shri J.B. Mohapatra ji. With this, I would request President Abhay Mehta to express his thoughts on this prestigious event of BCS. And before that, I would request all the participants to post their questions only in question answer box, as Mohapatra ji has agreed to answer them in last 15 minutes of after his talk. Over to Abhay, please.
Thank you, Deepak. Respected Chairman of Central Board of Direct Taxes, Mr. J.B. Mohapatra ji, Vice President of BCS, Mr. Mihir Sheth, Chairman of Direct Tax Committee, C.A. Deepak Shah, Co-Chairman of the Direct Tax Committee, Anil Sathe ji, Convener of Direct Tax Committee, Vishesh Sangoi, virtually present seniors and friends. A very good evening to all. This is a memorable day for myself and for BCS too. We have today with us the senior most executive of the direct tax from Government of India, who shall be addressing our members and public at large from BCS platform. First of all, sir, we would like to take this opportunity to convey our gratitude for providing us an opportunity to visit your office in person to present and discuss the post-budget representation prepared by BCS. There have been lots of development during the last decade to digitize the process of overall interaction with the income tax department. There has been paradigm shift in the manner of interface with the income tax authorities by the assessees as well as tax professionals. This government's aim is to continue on the path to progress by continuing with their declared policy of stable and predictable tax regime. Along with this objective, they are desirous of pursuing more reforms that will take ahead their vision to establish a trustworthy tax regime. When we requested Honorable CBDT Chairman Sir to address from BCS platform, he readily agreed and also shared his desire to make taxpayers aware of the steps which are being taken by the taxation authorities with certain policy directions for the long-term benefit of the taxpayers. So today we shall be provided long-term vision of the way taxation landscape shall be evolving so as to meet their stated objectives of establishing a trustworthy tax regime. However, before I invite Mr. Mohapatra ji to deliver his address, I would just like to briefly highlight the activities of BCS. It is the largest voluntary professional association of CAs with its motto of disseminating knowledge and empowering small and medium practitioners. I was humbled when Mr. Mohapatra ji also, during our personal meeting, stated that he was an avid reader of BCA journal and appreciated rich content for professional development. Thanks for your compliment, sir. I strongly believe that if you have an urge to learn and share knowledge, then BCS is the most relevant forum for CAs to be associated with. I urge you to visit our website and surf through the resources and events. This will provide glimpses of what is in store once you are part of BCS as members. I now invite Mr. Mohapatra ji to address the participants. Thank you, sir. Welcome, sir.
Yeah, thank you. My grateful thanks to the all the functionaries of BCAs who have arranged at very, I think, a short notice this interaction with the BCAs members. When BCAs representatives came and met me in my office, old memories some 20 years back, it flashed before my mind because many of one or two of the members who came and saw me, I could recognize them of my older days in Bombay. And truly speaking, my knowledge in income tax, it developed to a great extent thanks to the contribution of BCS journals, right? It gave me ideas and very good articles and discussion papers, thought papers on the directions and the trajectory of the tax matters which get recorded in the BCS journals. This is a nice and very informative read for all times. Before I intend to start off, this discussion a little bit on the budget and little bit on what we do towards formulation of the budget and the larger ecosystem where the things get worked out in the public finance sphere. At the end of the day, income tax is but a resource generating machine agency of the Government of India. So let's begin at the beginning as to how we do our work and why we do our work. Out of 30 to 35 lakh crores needed for the running of the government, running of the schemes, running of the departments, 13 lakh crores should be the contribution of income tax, and that much also will be coming from the CBIC. So CBDT and the CBIC in total, they have the unenviable task of getting the resources for the government to run. The rest of the amounts which the government would be needing but would not be having would be through the other routes, that is the disinvestment route, and some non-tax revenue also, and then the loans and borrowings for running of the government. Our target for the collections this year, at the beginning of the year, we have two targets, which are two moving targets which are given to us. One is the initial, in the initial days after the promulgation of the budget, we get a BE target, that's the budget estimate target, right? And at the presentation of the next finance bill, the next year, at about that time, we get the RE targets, the revised estimate target, right? So that we operate between the original budget target and then the revised target at the end of the year. For 21-22, we got a target of 11.08 lakh crores. And because 11.08 lakh crores, it was nearly 30% more than what we achieved in 2021. We achieved 9.24 lakh crores in 2021. So our target to us, it was not very steep, but it was 11.08 lakh crores. But because 11.08 lakh crores for the government to maintain its expenditure, target, stimulus, etc., it was not sufficient. In the last finance bill, the revised estimates was given. So the target now is 12.50 lakh crores. So from 11.08 lakh crores, the targets was revised to 12.50 lakh crores. As we speak, on this day, our direct tax collections is 11.67 lakh crores, which is 54%, 54.8%. Yeah, 54.8 is nearly 55% more year on year, same date or corresponding to the last year, right? I would say that the revised estimate of 12.50 lakh crores, thanks to contribution from the professionals like you and the real resource earners, that is the taxpayers who you represent, our revised target of 12.50 lakh crores would also be achieved. We will be exceeding also the revised target. This is not coming.
We have lost connection.
I think you is.
We have lost connection with Mr. Mohapatra ji, so bear with us, please.
Sorry, it got broken. Some advertisement came and it stopped. So let me start off where I left. So this year we are entering into a territory where the department has not gone before. We are entering into the 12 plus territory, and hopefully we would also be entering this year into 13 plus territory also. This is one of the things which have happened very fortuitously. I would not say that gods did not help the department this year. They have been so kind to us that the record number before this year was 11.18 lakh crores. So this year, 11.18 lakh crores in 18-19. So this year, we would be surpassing all the numbers which have been laid out before us. So this is something which I am very happy with the numbers. I am happiest with the numbers like you. And this year's numbers are so telling and so promising, and coming immediately after such a bad and disappointing year. This has given us a lot of hope on the resilience of the taxpayers, not only to survive in the post-pandemic days, but also to come out with such lovely numbers. And also, you would like me to thank the systems which we have built and you have helped stabilize. The systems, the rules, the procedures, the subsystems which have been put in place, as if the department is running on a beautifully synchronized autopilot. Things are happening, and this is the way to go forward. This is my humble idea, which you would also reciprocate, that voluntary compliance is the key for success of any regulatory system. Voluntary compliance should be the end goal of all our pursuits, and all your contributions should be targeted at voluntary compliance. Easy, comfortable, convenient way of complying to the requirements which a regulator would be needing. Now, coming back to the whole, the sub elements within our collections, there are basically 4 elements which go towards these collections. I will give you the small numbers. There are 4 collections which we make. Out of that, the least amount of collections would be coming from the Equalizer Levy. From 2016, it has come, and to 2020, there is some amendment. And now Equalizer Levy is a small but significant to us also. It is, it is reiterating the sovereign rights to tax on digital transactions. It gives us not more than 3,500, 4,000 crores, right? The next segment of collections is from the securities transaction tax, the STT, right? Our target initially was 12,500. The market was such in buoyant mood for entire last year that the targets was met while we are in only September or October. Now the target has been refixed at 20,000 crores. In the revised targets, we are now nearing 22,000 crores, right? So we should be ending up at around 23,000 crores under the STT. The next big numbers are 2. One is advance tax numbers, and the other big numbers should be the TDS, right? Advance tax at this point in time all over India is 4.83 lakh crores. 4.83 lakh crores is the advance tax numbers, and there is one more installment coming. So I am looking like a hawk. Everybody is looking like a hawk on those advance tax, the last quarter, the 25% quarter, the last quarter coming in on 15th of March. So that is one quarter, and the TDS. TDS gives us between 55,000 crores to 60,000 crores every month. By 9th or 10th of every month, we look at those numbers. They have stabilized at around 55 to 60,000 crores. So these are the basic fundamentals, the basic components of our collections. And within that subcomponents, if you analyze it a little more deeply, then you look at the asset tax. Asset tax will be like 1,20,000 crores every year we get asset tax. Although I want that number to come down and advance tax numbers to go up, but because of historical reasons, we are at 1.20, 1.25 lakh crores every year. And there is one significant number which you and I, you and the department would always be fighting for, is a small amount called regular tax. What demand we create under 143.3 or 144. And so that amount hovers between around 55 to 70,000 crores every year. So we are at around 62, 63,000. We'll end up with 62, 63,000 crores every year. So these are the big components. These are big components or the subcomponents of the entire collection subsystem. And all our efforts are towards looking at the numbers from month to month, from fortnight to fortnight, and to see as to where there are stress points. If the regular tax is not coming, then we look at a stronger recovery measures. If the advance tax is not coming, we let the principal chiefs and the principal commissioners follow up on the advance tax also. So this is the way we look at the various numbers, the subcomponents in those numbers, and try to follow up on those things. If you look at the numbers, the regular tax numbers are the smallest in the whole list, right? And this, to me and you, it is an irresistible conclusion that we are not exactly looking at the regular tax as a source of generation of resources, right? Our main aim is the voluntary compliance. The figures also indicate that we are not solely relying on the regular tax demand and collection. We are looking at your upping the numbers of advance tax and the TDS. So those are our goals. And how do you look at the advance tax? How do you generate more revenues under advance tax and our TDS? Is through engaging with the field and with the businesses, with the taxpayers, to look at their problems and try to solve as quickly as possible any problems coming therein. So policy holds the key to generation of government's revenues, resources. Resource generation is basically through policy. Enforcement of those policies are essential. To me, the regular tax collection of 65, 70,000 every year, it not only adds to the collection, but it also gives a message to the general public that the department is watching, looking, supervising, monitoring, and also is constantly on a vigilance mode as to the tax affairs of a particular entity. So this is a trigger to us in the department. This is a trigger for enforcing the policy measures of the government as a whole. That said, because the bottom line of all our policy for many years now is voluntary compliance, let me also tell you and lay down before you the profile of our taxpayers. Probably I would have told you when we met, but the profile of the taxpayers in India at this point in time, we account for, in our records, 11 crores of taxpayers. 11 crores of taxpayers. And how do the numbers come from? These are 7 crores of people who file the returns of income. ITR, they file the returns of income. And 4 crores names would be there who are in the TDS, who have suffered a TDS. 4 crores of people are there who have suffered a TDS, right? So we say that our tax base is 11 crores. Out of that, return filing is 7 crores, right? And those people who do not file a return of income, although they have suffered a TDS, for that, government has been trying in so many ways, from 206 AB to other areas, how to make people file the return. But if you look at the whole 7 crores of people who have filed the return, you find in the last 4 years, and probably many years before that, the profile is like that. 92% of the ITR filers are between 0 to 10 lakhs. And between 6.7 to 7% are between 10 lakhs to 50 lakhs. And from 50 lakhs to 5 crores, it will be around 0.7%. And from 5 crores upwards of 5 crores, there are not many. It's only about 28,000 to 31,000 assessees whose gross total income is in excess of 5 crores. So our profile of the taxpayers is very special to India. Here, there are very disproportionately lower number of people who are paying taxes. Our efforts, both at the board and on the field, is not only increase the gross numbers, but also try to see that the movement happens from a lower gradient to a higher gradient. I would be happy to see a little movement. It has happened in the last year, from 0 to 10 lakhs, people climbing to 10 lakhs to 50 lakhs, and from 10 lakh to 50, and from 50 lakhs to 5 crores gradient, people climbing to in excess of 5 crores. When there is a substantial movement of taxpayers graduating from a lower quadrant to a higher quadrant, then only we can say that people are doing well in business or in profession, and they are contributing to the developmental needs of the country. So this is the basic profile of our taxpayers. And with that, let me tell you that because voluntary compliance has been the mantra for many years for the department, things which have been rolled out in this budget are geared at voluntary compliance, and also to see that the issues with regard to many procedural requirements of the taxpayers, they are met. Let me give the broad 3 or 4 provisions which have been newly brought in. The first one, of course, will be the updated return, which has been an exciting improvisation in the Income Tax Act, Section 139(8)(a), allowing taxpayers an additional 2 years to file the returns with an additional tax. The whole idea as to why 139(8)(a) should be brought in the statute books was a realization of the department that if we keep our surveillance system engaged with the taxpayers on a meaningful basis, then there may be no need for us to be going the old route of issuing of the reassessment notice and then following up in many hundreds, thousands of litigations as to why reassessment notice is bad, why the process is bad. We have been failing, department has been failing for a long time for making its case in reassessment proceedings get confirmed at various appellate fora. So what has been done is linking, which is not there in the statute, but let me tell you that imperceptibly we are linking 2 provisions of the statute with one another. One is Section 135(a), and the second one is 139(8)(a). We intend to say, although we are not saying in so many words in the statute, that the e-verification scheme which have been announced under section 135 capital A. 135 capital A, you can see that it is a provision which takes into account the requirements of 133, 133B, 134, etc. And the e-verification, faceless e-verification scheme has been announced last year. It has been notified last year. In the e-verification scheme, those cases where mismatches occur in the taxpayer's information in the ITR, if he has filed a ITR, and the reporting entity's information about that taxpayer, those are being attempted to be resolved under the e-verification scheme. Giving an example, suppose somebody has sold a plot of land at a X price, and the department has the information from the reporting entity, which is a registering authority of the state government, the stamp authorities. They have given us an information saying that assessee X has sold property Y at this much rate. In the ITR filed by the taxpayer, if he has filed an ITR, if the sale price is any different from as given by the reporting entity, or if the potential taxpayer has not even filed a return of income, then under the e-verification scheme, the taxpayer or the potential taxpayer or that entity will be engaged by the authority, that is somebody from the DG INCI. They have been given the charge to look into all these reporting mismatches. Then he will keep him engaged until such time when that particular issue is resolved. If it is not being resolved, those information under 135A, they will be pushed for a reassessment as in the old days under section 148, right? But because there will be a time gap between the processing of the information at the DG INCI's level with regard to a particular data and engaging the taxpayer for a long time, also has the effect of convincing the taxpayer that instead of getting a notice under 148, it is better if he is also convinced about the bona fide of the action of the income tax department, that it is better to file a return of income if he has not filed a return, or it is better to revise a return if he has if there is still time. That is why these 2 years additional time is being given under section 139(8)(a). This is not only giving a chance to the taxpayer who has missed filing the return or needs to revise his return if he has filed any. This also is an attempt to reduce litigations on the hundreds and thousands of reassessment notices which are being regularly issued since time immemorial in the department. So 139(8)(a), it is targeted at two things. One is reduce litigation on one thing, and second thing is that it is giving a chance to somebody at a very little additional. You'll always quibble whether additional tax is more or less, but with a little payment of an additional amount, he can regularize his affairs. So that is all I can say about 139(8)(a). Updated return. Reducing litigation also has been specifically conveyed in section 158(ab). 158(ab) is a provision which does not bind, as in the earlier times, to a specific assessee for a specific issue. It binds the department on a specific issue across the taxpayers in that high court jurisdiction, meaning thereby, if a tribunal has decided a particular question of law in favor of the assessee in a particular case, the jurisdictional authorities, income tax jurisdictional authorities in that high court's jurisdiction, they will be obliged to accept the tribunal's decision until such time that question of law is decided against the revenue. So this is something where taxpayers and the department hopes that new litigations will not be generated with as much frequency as it has been done. Look at 158 AB and you will understand the import. Now what we are doing from the board is trying to strengthen the CIT judicial office setup, so that the questions of law at the tribunal level, which have been decided against the revenue, which can be tabulated and a clear direction can be given at the field level so as to prevent filing of unnecessary appeals against a decision of a commissioner appeal or the tribunal. So this will go a long way in not generating litigations. Apart from 158 AB, there are few other exciting, to me personally exciting things which have happened in the finance bill, including the crypto. Crypto is an area which the department, many would not be knowing. The department has been working on the crypto for a longer time than you could imagine. We have been working since 2014. Not at the policy level, but at the enforcement level as to what is happening in crypto. And we are now, honestly, I will not say at a sufficiently higher level of understanding the crypto, but we are at a working level of understanding the crypto. And because the market is so vast and so fast moving, it is about time. There was some regulation which was required, and the income tax department was thought to be the department which can go and measure up and which can fathom the depth of this market. So that is why the 115 BBH and 194S. 194S is to look at the TDS requirements in respect of crypto, and 115 BBH would be the taxing provisions under the special chapter. So those have been formulated. I would not be that confident to say that legislation at this point in time is strong enough to answer to the various issues which will come up. But at least a beginning has been made to the taxing of the crypto, the virtual digital assets, and over a period of time, as you and I and we you and the department grow in educated with regard to the various working of the virtual digital assets, including the mining part of the digital assets, then probably we'll be at a better position to see that at least for the taxation purposes, the government gets what it is intended to get from this line of trade.
You are on mute.
Sir, you are on mute.
Sorry, it's happening quite frequently now. Yeah, can you hear me now?
Yes.
Yes, sir.
Yeah. The last bit on the finance bill, let me tell you, which is forward-looking, is section 156 capital A, in which for the first time the departmental officers at the level of the AO will be giving effect to an order which is not from the Commissioner Appeals, from Income Tax or the Tribunal, or from the High Court or the Supreme Court. They will be giving effect to the adjudicating authority under the IBC or the NCLT, or the High Court in respect of that NCLT or the Supreme Court. So this is a very forward-looking provision, which should be helping the taxpayers and the department in cleaning up the books of account with respect to area demand of the department. Let me tell you that our area demand includes a huge lot of money with regard to cases where there is no foreseeable chance of any recovery. And because of two things which happened in the department in the last year, one was the demand with regard to the retro tax amendments which were brought in, and the provision of 156 capital A in this finance bill. On these two provisions, the department hopes that its area demand books would be cleansed, and it will be a better looking area demand book for the future times. So the very idea behind, the underlying idea behind the finance bill of 2000, the last finance bill, is basically not to have a great amount of disruption in the functioning of the department and least inconvenience to the taxpayers. Towards that end, the whole idea was there before behind the finance bill. More tax certainty, less litigation, and stability to a system which is working. To me, a system which works and is giving results is a system which should not be dealt with in a manner which jolts everybody in the system. It has been a gradual and a graduated and a very well calibrated attempt at creating a system by eliminating those irritants and helping both the department and the taxpayers in their tax matters. There are a huge lot of things which need to be done with the Income Tax Act and the administration of the Income Tax Act by the department. But let me conclude by saying that it is always a work in progress. Things which you read every day will have a different meaning the next day. Nothing in the legislation is taken for granted. That if you understand a particular piece of legislation in a manner which is relevant today, that legislation will be read very differently the next day, not by the courts which are hearing your cases, but by yourself. But my point is that legislative intent, which I am expressing to you, what I understood from the finance bill, the essence and the intent of the legislation is what you and me should be striving to convey to wherever we litigate our cases. It can't be a case that the intent itself is misread or misinterpreted on a later date. So if we clear ourselves of any doubts or misgivings with regard to a particular legislation at an early day, misinterpretation and unwanted interpretation of that legislation should not be happening on a large scale in future years. The fact that 40A Roman 2 was amended after its introduction in 2005, 2006, in 2022, it shows that probably the department and the government failed to convey that surcharge is not an allowable expenditure. What was that? What was lacking in that legislation? Which had to be amended 15 years after its introduction. So these are few things which we should be looking at very closely. The language of the legislation and the intent behind that language and the intent behind the legislation. If we are clear from day one, it should be helping the taxpayers a great deal, because nobody, including you and us, would love a litigation. If the voluntary compliance structure is well and good and running, then creating unnecessary litigations should never be the end goal of either the taxpayer or the department. This current finance bill is an attempt at reducing litigations, both in the language it has framed of the different legislations, but also in its very intent. That is why for this year, our explanatory memorandum is very expansive in making people understand the intent behind the legislation. The intent behind the legislation. It's not a copy of notes and clauses. It's an elaboration of the thought process behind an amendment. So kindly advise the clients of yours that the intent, if they find any trouble in understanding a particular legislation, the finance bill, then they go to the memorandum, the explanatory memorandum, to try to grasp the essence and the drive behind a particular amendment. And this is where I conclude. But I have been told to request you, and through you to all your clients also, that because the time barring of 31st March is fast approaching, all those notices under 142.1 and 143.2, they need to be complied. And department would not like a wide scale, best judgment assessment. So if we can gently advise the professionals who are working with you or in the organization and their clients that if the compliances can be made little quickly, then it will help both the taxpayers and the department. So this is where I end, and I thank BCAS for having invited me, and I would love to come back to the BCAS, and I will also like our legislation wing and anybody who you want to engage with you on a regular, on a concentrated way, so that the best of what you can offer, we can utilize for our mutual benefit. Thank you.
Thank you, sir. Anil, your comments, please.
Vishesh, questions if any? Vishesh?
Yes, I'll just share the screen.
Yes. Oh. Too long a question.
Yeah, correct.
Can you just
Can you read out so that it becomes easy for me?
Yes.
Surely, sir. So the first question pertains to the retrospective amendments. So the question posed by the attendees, isn't it completely contrary to the stated objective of present government? Looking at, there are 84 amendments which are either retrospective or retroactive.
No, I would not agree, except 40A Roman 1, 40A Roman 2 with regard to surcharge. I think none of the other is specifically retrospective. So I would like to be educated as to where these 200 amendments which are running, which are being retrospective or which are being labeled as retrospective. And what is this retroactive? I would not understand the retroactive, the meaning of retroactive in a legal way. Can we go to the other?
Yes, I think we should take the next question. This is too long.
Okay.
And we will go back to sir elaborating on this. Take the next question.
Yes. So the second question pertains to multiple rates of tax which are applicable to an individual and the corporates. So the question is, looking at the multiple options, the laws become quite complex with changes being made every year. So is it possible to simplify it?
See, again, if simplification would have come without any option, that would have been a problem. Suppose the exemption and deductions, which one is getting over a period of time, and one is sufficiently assured that the deductions and the exemptions is likely to continue for future years, because he has made plans and investment and his cash flow in accordance with the sovereign promise of the government. Suppose one fine day, all these exemptions and deductions would have been taken away without an option to him, then things would have been really, really bad. So the very intent of section 115 BAA or BAB or the BAC is to allow everybody an option to choose from a basket, from at least two alternatives. One is go to the original taxing provisions, or come here. Give yourself a chance. Don't take the deductions or the exemptions, and you can be taxed at a lower rate. So this is to gently goading the taxpayers that the department as an entity and the government will not like the distortion in the tax policies because of the presence of various deductions and exemptions. This is a gentle trajectory in which the department is moving. That is why section 115 BAA, BAB and the BAC have come in. If one is getting used, see, the point is, at this point in time, one could have done something to section 115 BAC, would have brought in more sections for more different level of assessees. But now section BAA, BAB and BAC, it is applying, it is catering to the demands of various statuses of the assessees. So the point is giving an option to a taxpayer has been favored because the taxpayer is used to a particular regime in the future years, and unless the taxpayer finds a good substantial arbitrage opportunity in the new regime, he would not like to get away to the new regime, to get into the new regime. So it is a considered opinion of the department and the government that there is no such great complexity and with regard to the new regime which has been brought about.
Okay.
Yeah.
Moving on to the next one, sir. How is CBDT planning to address the high pendency of cases at the commissioner appeal level? How can a taxpayer request for an early or a priority level, sir?
Yeah, there have been issues. There have been issues with regard to disposal at the commissioner appeal level. I will not refrain from not admitting this fact. The appeal and the penalty and the assessment in the Income Tax Act, they work little differently under the current regime. While assessment under the faceless regime is now part of the statute, under section 154B, right?
Yes.
The penalty and the appeal, they are not part of the statute, right? The SOPs are not driven into the statute as happened in the faceless, right? So you have under the penalty, give an example, that is this section 274A, 274 capital A bracket 2, which says that it will drop a scheme. as approved by the government. So the scheme, the penalty scheme has been approved by the government at the minister's level approval, right? We're running the scheme with the approval of the government at the level of the department. Department gets approved. Similarly with the appeal. The old appeal scheme, it had some issues, right? The old appeal scheme of, I think, 2020, it had some issues with regard to few things which we were allotted to by the various courts. One was with regard to giving opportunity of hearing to the taxpayer. Number two was, why should a CIT appeals order be reviewed by another CIT appeal? There are two basic things. And the third one, which we noticed, was why should there be a chief commissioner level officer at the 4 regions? We call that RFAC, Regional Faceless Appeal Center. Why should there be 4 chief commissioners? What exactly they will be monitoring? These are quasi-judicial authorities. In what way you will be administratively monitoring those things? So, taking into account all the advices and all the orders, judicial orders, we reframed the appeal scheme this year, right? In which the CIT appeals functioning is now it has now been made more convenient and easy. Here, the right of hearing to be afforded to a taxpayer is not guided by any consideration with regard to complexity of facts or substantial question of law, which was there. In the earlier advice, a right of hearing was conditioned upon or contingent upon the assessee telling and the CIT appeal being satisfied that there is a substantial question of law and there is a complex set of facts for which he needs a hearing. The court said, and we agreed, that right of hearing should be untrammeled and it cannot be leveraged with any decision with regard to any of these conditions with regard to fact or law, complexity of facts, or substantial question of law. So now there is a new appeal scheme which we have brought in. That appeal scheme is getting now settled. So we are reasonably confident that the new appeal scheme, once they start functioning, even the VC also, that also has been acted upon. So the numbers will, the disposal numbers will grow. It has been slow because of the problems in the scheme.
Okay, thank you, sir. Due to paucity of the time, I'll skip a few questions and go to question number 8, sir. So, what is the stand of the department in respect of notices issued under Section 148 during 1st April 21 to 30th June 2021?
See, the jurisdictional high courts have taken a call on a case-to-case basis in respect of litigation, which have flown to them, which have been raised before them. Whereas a Rajasthan High Court or a Delhi High Court would favor the taxpayer, Chhattisgarh High Court has given a decision in favor of the department. It is not the case of the department. It is not the present thinking of the board that a omnibus direction be given as to what the department intends to do with regard to issuance of notices between these 2 dates. It is left to the principal chief commissioners and the field setup to decide on these matters, because all these notices which have been issued, they have been litigated or they would be litigated. We do not want to preempt the operation of the rule of law as administered by the jurisdictional high courts in any of these cases.
Vishesh, I'll just ask a couple of questions and then possibly I will ask sir whether he has time. Sir, just one question is that, as you rightly said, that the crypto is a new animal for maybe the taxpayer as well as the department. would you
I did not say an animal.
no. I only said that it's a situation where it's something new. So would you be inclined to launch a stakeholder consultation with the taxpayer, so that because this is a new area, the controversies could be reduced in future? It's new for all of us. So whether we can have maybe a consultation paper or something of this sort vis-a-vis tax.
Absolutely. Agree with you. 100%. We'll have that.
All right. And one more question, sir, is we do appreciate, and you said in your talk that TDS is a major portion of your compliance, in the sense voluntary compliance. Would you be willing to look at a little bit of more simplification on the TDS procedures, so that the person is then willing to comply with far more easily than he does today? So that's one thought that I had. Maybe we could look at something like again a dialogue in regard to TDS, so that yes, compliance everybody wants to make, but make life a little more simpler for the deductors, is what I'm trying to point out. Would that be possible?
I agree that. I agree 100% to what you say. TDS does two things for us. It gets us collection, right? It gets us collections. Nearly 40-45% collections will be coming from the TDS route, right? And the yearly outgo of refund because of the TDS is not more than 17-18%, right? So we get 17-18% of all the gross. It goes out by refund, and mostly refund would not be happening because of advance tax and self-assessment tax. It would be happening mostly because of the TDS payment, right? So there is some overpayment happening on the TDS side. We are aware of this issue. So it not only generates revenue for us, but it also, to me personally, it also gives an idea as to where the people are investing in or expanding at, right? Like at this point in time, let me tell you that out of all the provisions from 192 to including 206, the best we are getting from the TDS, the maximum is from the first one. The salary part, right? It is giving us nearly 2.50 lakh crores of TDS from private salary and nearly 50,000 or little more from the government salary. So out of all these things, and 194N cash, disbursal, 0.01% on the cash disbursement or 0.1% on the cash disbursement, it's not giving me more than 5,000 or 7,000 crores every year, right? So we are looking not just the revenue generating potential of a section, but also looking at the depth where people are investing in, right? So these help us to measure the market, the depth of the market. That's why 194S has been brought in. 194S would tell us that what is the volume. Like, there are conflicting reports with regard to the volume of the crypto trade, right? Some would say that one exchange is generating 34,000 crores of revenue, right? Anecdotally, they will say that 10 crore people are invested in crypto. So, I mean, there are conflicting and hugely different ideas being floated with regard to the market, with the virtual asset trade. Now, with 194S, we may never reach at the right data, but we can reach to an approximate level of assumption, which will give us some data points and data support for our future actions.
Right, sir.
Yeah, but I agree with you 100% that TDS provisions, they need to be looked at with regard to the compliance part by the taxpayer.
Yes. One final, I will not call it a question, only a suggestion, sir. We were very happy when, in regard to charitable trusts, I'm not talking of the finance bill, I'm talking of the circular which enabled condonation of delay for filing 10B and Form 10. There is a suggestion from a large now section of professionals that the option scheme came in a couple of years ago, which required a form. Now, many people have, misread those provisions to the extent of the procedural part. So whether a condonation scheme like we had for 10B could be put in place for maybe 10 ICA or so, people have chosen that option, but the process has been, somewhat deficient. So if that could be thought of, that will be of great help, is what my thinking was. Anyhow, sir, we do not want to, we hope is a great beginning of an interaction between us and the department. We are very happy. And I would echo your sentiment in saying that, yes, voluntary compliance is what the department wants and what we as professionals want as well. So therefore, I would say that earlier we used to say that let's hear from what is the view on the other side of the table. I now get a feeling that yes, there is a approach whereby we can both be on the same side of the table, and I'm very happy that and I hope this is only a beginning of the interaction, and we have many more such meetings in future. And I know there are a lot of questions in the question answer box which have not been answered. I would request, if it is in the fitness of things, that maybe we will tabulate them, and with an interaction between sir, you and us, we will be able to address them as well. Sir, as I said, this was a pleasure in having you speak to us, and we will definitely come to your office and expect this interaction to continue. Sir has been absolutely candid, and I hope that all of us here respond to the request that he made. And with this, I must once again, from the bottom of my heart, on my own behalf, on behalf of the Bombay Chartered Accountant Society, and all those who are present in this virtual webinar, present a vote of thanks and request all of you to carry it out. Thank you, sir. Thank you. Hope to see you again, sir.
Thank you, sir.
Right. Okay. Thank you.
Thank you.
Yes, sir.